Good evening, ladies and gentlemen, and dear friends. Thank you for joining in for the webinar on investments in COVID times and investments in mutual funds through InvestNow. Here we have today we would cover the investments in investments during times of COVID would be covered by VK Sharma sir, who's the head of our PCG and client interaction, and the session, InvestNow session, would be taken by Lohit and Ashish Asthana. I am Sharat here. I'm the state head for HDFC Securities, and I welcome you all to this webinar session. Yeah, over to you, VK sir.
Thank you. Ashish, you'll have to help me with the slides.
Sure, sir, I'll do that.
It's a pleasure speaking to you all. And it's more of a pleasure because after the knocking down that we have seen, the markets are up almost 35% from the lower levels. And it's a great thing that the kind of return that we look forward to making in a year's time, something more that we have got in a month's time. So essentially, these are very exciting times. And my advice is just make hay while the sun shines. Okay, let me look at where we look at the history, what has happened. The problem on hand is that we have a virus around, and this virus doesn't seem to go away at this point of time. We were quite early to begin screening other international passengers. We were also ones to have a quick and a very strict lockdown also. And so while we have saved human lives, there is an economic price that India has paid, and that price is in the form of an economic slowdown. So our economic slowdown is much more deeper than other people, essentially because of the fact that the kind of money that others have thrown in, we do not have that capability to throw in. But nevertheless, our country, both the Reserve Bank of India and the Government of India, have made sincere efforts to ensure that the economy really doesn't go down and is saved in the times to come. So what has happened is that now as we get ready to open air traffic and other things, we'll see that the number of incremental people getting infection will go up. And after 8 June, when we further start, more people go to work, I think the numbers could further increase. But somewhere down the line, in the month of July, we could see that hump. From there on, the numbers could go on declining. So what we have done is essentially India has bought time to cater to have the capability to make masks, make the PPE kits, and also ensure that the adequate and healthy quarantine facilities are there for people who are required to be kept in a quarantine. And goes without saying that we have domestically made many kind of ventilators and have added a lot of IC rooms. So basically, this time has been well utilized in terms of building up the domestic capabilities. Now let's look at what happens now. So next slide. Yes. The global, now people obviously compare when you hear on television or you read in the papers or when you talk to the fellow people or phone, you are surrounded by these questions that while the economic data is bad, the market is running away, or so much that the economic numbers are so and the markets seem to be going berserk. First and foremost, people also compare this with the year 2008. So let me make it very clear. 2020 is not by any stretch of imagination a repetition of 2008. It is not. Why it is not? Let me be very, very frank. The response of the central banks, let's take the US. Lehman Brothers had collapsed in September, and in October, the US markets made a bottom. The Dow made a bottom in October 2008. The US Federal Reserve came with a stretcher for the economy in November 2008. a month after the low had been formed in the Dow, with an initial infusion of around $600 billion for the economy. Now, mind you, the US Federal Reserve went on to infuse the economy with more amount of liquidity in the next 4 years, and the US balance sheet of the Federal Reserve, it ballooned up. But this time around 2020, there's a huge difference. To bring an analogy from the point of view of the, let's say, the current scene, the hospitals, if you were to look at, if a person gets a heart attack, the next half an hour is the golden period in which you can take the person to the hospital and really save him. And so this time around, while the US Federal Reserve did not wait even for a heart attack to happen, the moment they noticed that there is sweat on the face, they announced $700 billion, $100 billion more than what they had done in 2008. And more importantly, a fortnight after that, the US Federal Reserve came back and said, now there are no limits to what extent they will infuse into the economy to ensure that the US economy doesn't go down the drain, and it really is in place to absorb the shocks which the COVID-19 will give them. And you know what? Things are pretty good now, and the markets are doing much better than what we have seen. In India, the scene is very different from what we have seen in 2008. To give you a proper perspective, in the year 2008, the FIIs in India sold close to 58,000 crores worth of equity shares, and this year, in the month of Feb, March, and April, the FIIs have sold close to 67,000 crores worth of stocks. That means 15% more what they had sold in 2008. And the markets then in the US had fallen 55%. Here in India, they had fallen 61%. So the main complaint of the bears on Dalal Street is that the market should have fallen 61%. So we were the ones who were saying right from 26th March onwards that this is a market where a bottom has been made, and we are now looking forward to higher levels. And fortunately for us, the markets have held out quite strongly. The reason is this, that the US, while despite the FIs have sold aggressively, it took almost 130 days plus in the 2008 to move the markets at least 40% down. And this time onwards in 2020, the markets tanked 40% in a matter of 26 days. That is the intensity of the selling of the FIIs, but it was absorbed well in advance. Market didn't fall as much, and they recovered also. So to that extent, why? Because we have domestic investors pouring in money. So that's the basic difference. People who would want to draw conclusions that 2008 should repeat, no, 2008 is not going to repeat in 2020. That's our take. I've also told you that apart from the US Federal Reserve, there are other central banks also, whether it's Bank of England, whether it's the ECB, Bank of let's say Canada, and the Bank of Japan, and everybody worth his salt is infusing money into their economies. Even people who complain that our money that was pumped in, 20 lakh crores, was less than what the market expected. So we are not a very rich country, we cannot afford. But even people who complain that the cash component is very low of this stimulus, let me also remind such people that the cash stimulus which was given in 2008 as compared to the cash stimulus given now is 150% more than that. Having said that, we are here, we are saying that the markets have probably made a bottom and we are headed upwards from these levels. Most important, and what is very heartening from a perspective of the market, is that in this falling market, the public hasn't increased the shareholding. Sarat, you would note that the shareholding of the promoters has gone up during these COVID times, which is very heartening. So they are the ones who know how their companies are going to perform, are the insiders, and they are buying. It lends you a lot of comfort. I would have totally at discomfort had the public been buying these kind of stocks. Next slide, please. Ashish bhai. Yes. Friends, we wait for the markets to tumble. Okay. And we remember buffet that when the blood is on the street, you should be buying. But when it actually happens, we go away and we do not have the heart or the confidence to buy the markets. In fact, these are the times at which one should be buying. So if you were to look at the kind of buying that we have seen in the markets in India, the better part is that the recent bear market in 2008 was only 15 months old. It didn't last beyond that. So even assuming that the bottom which was made on 24th, 23rd of March, which was of 7,511, was not the bottom, a new bottom can still be formed. But it goes without saying that if at all the markets have to form a newer bottom, the newer bottom will be nearer to the current times than after 6 months. So if at all, what is the remedy? People who are feeling left out, that we have not participated in this rally because we were not confident enough, don't worry. Now is the time for you to do. You can start investing now. Do it in a SIP, spreading over 6 months or at least a year. But even if you do 6 months, that I think should be enough to take care of all the downside that might be there in our markets. But 1 year is definitely something which out of safety somebody will advise. So if you have not participated, it's time for you to participate by virtue of a SIP. If the markets fall, well and good, because you are doing an SIP. If the markets don't fall, no complaints. Your invested money that you invested last month is going up next month, and the next month what you'll invest will further go up. So as investors, we have no complaints. Next slide, please. See, this is the advantage why we need to put in the money, because when the market bottoms out, when a bear market bottoms out, the past 4, let's say, bear markets tell you that the average return from 1 year from the bottom being made has been close to around 69%. Fantastic returns. So no issues whatsoever. So you can even start investing now, and I think you'll make a kind of money that has not been made for many years. So essentially, this is a good time to participate. Next, we'll look at the various sectors where the money needs to be put in. Yes, sir. The sectors that are doing well, that could do well. So on the top of the list is the telecom sector. Sarat, you would recall that during the earlier meetings that we have had with the investors, that was the regional, we've had various conferences. So at that time we had said that in this lockdown, something which is very, very clear is that the telecom industry is doing better than what they were doing before COVID.
Right, sir.
Essentially,
Yeah.
because all of us are using our data, and therefore we are consuming a lot of data. So these companies, despite the lockdown, they are doing well, or shall I say, because of the lockdown, they are doing better, all the more better. Now the second sector which is doing well is the pharmaceutical industry. There are many things which have happened here. Apart from the fact that people believe that you will need these kind of medicines, medicine as a sector, pharma sector has gone up. But the basic reason behind this is the moment we decided to ensure that we exported the kind of chloroquine tablets which the US wanted or Latin America wanted and the rest of the Africa and other places, we supplied them. So the US, there was a change in the US FDA stance. The clearances from the US FDA began coming in faster, and there were less observations, and more importantly, the headwinds which were there in the form of FDA reluctance to give clearances have now become a tailwind, helping this sector. But mind you, this sector has risen fantastically. Most of the leading stocks have more than doubled in the last 4 months. So essentially, this sector has to be bought by virtue of that you buy something right now, and for the rest of the correction you wait. So you buy the dips having bought 33% to begin with, if you don't have exposure. Third sector, IT, is nevertheless a evergreen sector, but do not expect more than 10-15% return here in these, unless of course the company concerned is going for a buyback or is planning to delist the shares, something which has happened in Exaware. Similarly, opportunities could arise in the metal space where Sterlite is trying to delist its shares, but that delisting will takes a lot of time, and one cannot really make positions based upon this expected listing price, because the listing price, what they've said, is 87.5, which is very, very low, and obviously the book value of the company is much higher. So we expect that the delisting will happen only at a higher price than even the current price, not to talk about the 87.5 what they have proposed. Having said so, what is my advice to the common investor? The common investor, the best thing for him is a low cost ETF, and that low cost ETF also, if you do an SIP, there's nothing like it. And what can you do more to make it the rewards make it more rewarding is the fact that this SIP can be in the form of, you can make it an intelligent SIP. That means, for instance, if you are doing a SIP for the next 12 months, okay, and you have invested for this month, next month suppose the market falls 10%, you prepone your next 3 months of SIP and invest. If another 10% fall happens, prepone another 3 months and invest. So that way, while you are continuing to invest every month, you are taking into cognizance if the market falls further, then you are not waiting for that month. If 20% falls, your 50% of the money should have been invested. So in that way, you are taking the advantage of the fall and preponing your SIPs. Of course, if you're a salaried person, you can't do it, but you have otherwise put in money that you do not want to take risk at one go. But at that point of time, should the markets fall, you should be willing to increase your allocations for the equity. Now, we have numerous, Sarat, we have absolutely a fantastic bunch of offers that we have, and within these small cases, a plethora of small cases that we have made, one small case I'd like to highlight, and that is the small case of insurance and AMC companies. The reason I'm saying this is a good small case, primarily because it has the best returns. One. Second, it invests in those two sectors, insurance and AMCs, which are relatively new on Dalal Street. These companies have been listed only in the last 1 to 3 years. So essentially, it's new, the appetite for them is very high, and people haven't yet bought to the extent that they want to do. So we expect that this portfolio is not only good for next 1 year, next 5 years as well, and it will stand you in good stead even in the next 10 years. Having said that, I just want to make 2 more points. Sarat, I want to leave our viewers with one thing, that while it is politically right to say that the bottom may not have been made, but 2 things make me believe, Sarat, that the bottom 7550 that we have seen was in fact the bottom. Why? Because the Nasdaq has gone up, has made a
new high, yes.
About that, some points. So that is negated, one. Second part, coming to our own market, if you look at the past 4 bear markets we had since Harshad Mehta days in 1992, you would look at never a correction had made a higher high. So
Right.
highs that we made in April, in the month of April, in the month of May, the markets fell, and those highs have been crossed in the month of June. So we made a higher high. So we had international indices telling you, or domestic indices telling you, the concept, the investors are here. So I'm very, very sure that this is a good time. But mind you, the next April, May, June is a quarter in which that will bear the brunt of the lockdown. So the results will be bad.
Right, sir.
And
Yeah.
you will be under tremendous pressure whether to buy or sell, whatever. So over to you for questions. I'll take 2-3 questions if there are. Sarat, you can
Right.
ask.
Yeah.
ask.
Yeah. Ashish, how do customers, customers and participants, if they want to ask a question, how do they ask a question?
So there is a question mark icon on your screen, viewers. You just need to press that and the panel will open wherein you can type in the questions and we'll be able to take it. So first question we are getting, what should be the right approach? Shall we go for a one-time investment lump sum or SIP should be the best way of doing it?
Okay, great. See, it is safety investors, we should advise safety, and that safety comes from a SIP. You can make it intelligent by virtue of the fact that if a law has to be formed, it might happen, a new law, if at all, will happen, should happen in the next 5 months or so, nothing beyond. So even a 6-month SIP will do the job. But if you buy everything right now in one go, you run the risk. So I wouldn't advise. I would advise that you buy in tranches, but some of those stocks where the fundamentals are changing for the better, like in telecom, you could think of buying in one go also, but that shouldn't form a part of a large part of your portfolio.
Right.
Question, Ashish?
So next question. Yeah, next question coming in from Mr. Raghavendra Prasad. He's asking, what are your views on PSU sectors and PSU banks?
Okay. See, basically we believe that long-term prospects of the private sector banks, the top 3 private sector banks are much better. But at this point of time, the PSU banks could give you good returns in the days to come. So that is only for the short run. So if you are holding those kind of stocks, I think you have a good week coming ahead and you should see a large appreciation in these kind of stocks. So do not sell them as of now. You could see high levels in also coming. But for long-term portfolio, I would still suggest you go for the top banks, private sector banks. Yes, Vijay.
Great, sir. So next question coming in from Mr. Damodaran. He's asking, hi, I would like to invest in the sectors mentioned by VK Sharma. Could you please provide any ideas on that, which I can look forward a time horizon of like 10 years or above?
Yes, Ashish. So you do that presentation of the portfolio that you have said about insurance and PMC.
Sure,
You show it.
and I will show that, sir. I will show that.
Yes. Any other question? Otherwise, I hand it over to you. Any other question?
One last question coming from Mr. Prasanna Kumar. He's asking, is it the right time to invest in mid-cap stocks?
Okay, sir. If you have the appetite, yes, it is the right time into mid caps, but you need to have the appetite for that. But please remember that the next 3 months are going to be tough from this perspective, that you are looking at bad results and rising markets. So something could happen which could bring in a quick correction. So at that point of time, you'll do well to, if you want to have an exposure to mid caps, be very sure that you are buying the good quality mid caps. Otherwise, ensure that you do it in at least 2 or 3 stages, and you have to average down lower, not higher. Thank you. Thank you, Sarat.
Yeah, thank you very much, sir. Thank you for sharing your views. It is very insightful. It has been very insightful, I think, and candid as well. This is what your approach to markets have been always right. And this time also, I'm sure we would see it would be proved right. Thank you very much. Thank you, sir.
Thank you, VK sir. Thank you so much. So, viewers, All right. So I think, VK sir have fairly covered up in terms of the knowledge levels about the current view what we have. And it is always rightly said, whenever the markets are down, it is the best time to enter, right? Every down is a hope for the new up. So with that grounds, as VK sir was mentioning, and there were many questions coming in on stock specific, like which sector I should opt in for. So viewers, we have two things for you now in order for the execution. One would be if you are looking forward towards direct investment, you're looking for a direct equity or you're looking for an indirect equity, right? If you're looking forward towards direct equity, as most of you have been talking about, so what you can do is simply you can log on to hdfcsec.com. Here we have an icon called Invest in Ideas. So once you click on this, just allow me a second. Some technical glitch. Just one more second. So right here we have something called as the Invest in Ideas, which is which VK sir was mentioning at this point of time. These are the basket of portfolios, basket of stocks that we have created, wherein you can, instead of you picking up individual stocks, let the expert handle it, because this each of the portfolios are handled by a research analyst, and they do a regular periodic review as well. And in that review, if they found any of the stocks about to go laggard, they replace it with a better performing stocks. And that is how your portfolio every quarter gets updated, and your intervention would be only once in a quarter whenever there is a rebalance available, right? So similarly, what he was talking about, you can just click on load more small cases. Here we have this insurance pack. We have insurance and AMC, as VK sir have mentioned that insurance and AMCs are going to go good. And you can definitely see the triggering point out here is that these are having a wonderful CAGR returns. So if you see the CAGR return of this insurance and AMC pack, despite being this pandemic, still it was able to deliver about 31.2%, right? Which is fantabulous itself. Similarly, there are others as well. You can access it and you can, invest as per your leisure. You can log on to hdfcsec.com, just click on Invest in Ideas and you can explore, right? Now I will talk about our sensational platform that most of investors would be waiting for, that is InvestNow, right? It's a state of art, mutual fund robo advisory platform, wherein just in less than 30 seconds, you can onboard yourself and you can start the journey of investing into mutual funds. You can do goal-based planning in this, and you can invest in gold as well. It is a fantastic platform available within your net banking itself. Considering this lockdown scenario wherein we cannot go out, offices are not working, they are working with a limited staff, things are getting delayed unnecessary. That should not impact your portfolio, I think, because this is the time, this is the momentum. Considering that, which is the need of the hour, HDFC Bank always ensure that we upgrade our technology, we upgrade our digital platforms onto the level wherein it should be, single-handedly in just few clicks, online, digitally, without any assistance, you can do that. So let me show you that how you can onboard yourself to InvestNow. I'll just share my presentation. Allow me a moment. So yes, this is what InvestNow is all about. I'll just make it full screen. So you have to log into your internet banking. After you get logged into internet banking, you need to click on Mutual Funds tab. Once you click on Mutual Funds tab, here at the bottom, you will find an icon as Invest Smartly, Invest Digitally through InvestNow, which has been presented by HDFC Securities, right? Now here, if you are holding a single account and you are mutual fund KYC compliant, resident Indian, you can onboard yourself in just less than 30 seconds. In case if you have any issues in terms of your KYC process, if you are non-KYC compliant, which you can check on cvlkra.com by entering your PAN number. If it is not, you can get in touch with your relationship manager with HDFC Bank, or you can get in touch with HDFC Securities support team to help you further, right? Post that, this platform will be displayed in this way, wherein you need to select your account. If you have multiple account, joint and single account within the same cust ID linked, it will give you a drop down. So please select the singly held account from the drop down. Click on terms and condition. Enter your bank RMLG code if he's been assisted. Once you click next, then this platform will be displayed, which is a FATCA declaration. Post FATCA declaration, this is a third click, your income declaration, and you will be successfully onboarded to our platform, right? I will take you to the live platform now. Just allow me a moment. And in case if you have any queries on that part, you can please post us in terms of platform or in terms of knowing about invest in ideas. We will be more than happy to take it. Right, you can see the net banking login now. I've clicked up on mutual funds. Once you successfully onboard yourself, for every time for future viewing, you have to again click on this. Instead of register, you will see an option of start now. The moment you click on it, this is how the platform will be displayed. More than 30 AMCs are there, more than 5,000 to 6,000 schemes are there. Again, to make it simplified, HDFC's research team have done their due diligence and come up with the research recommended schemes, which are then bifurcated into need-based analysis and goal-based analysis. So here you can see this need-based analysis wherein aggressive, conservative, moderate, and save taxes. These 4 icons are displayed. You click on any of them, relevant schemes will be displayed, and you can select. It is very simple and easy. Let me tell you how to read any mutual fund schemes. So here you can see, for example, Access Blue Chip. You will see the NAV, you will see 1 year, 3 year, 5 years return. Of course, 1 year return is negative because the markets were really down, and that is where the opportunity lies. But if you see 3 years and 5 years return, those are positive. Right? And to also give you some information and being transparent, you can see this AUM details here, which is nothing but what amount of money that people have put in or this fund manager is handling in this particular scheme. So 12,716 crores is the AUM which this fund manager is handling. If you want to know further more details, you can click on show detail, and right here you can see the objective of the scheme, since when, the inception date, who is the fund manager, performance, what is the portfolio allocation, where your money gonna, fund manager gonna put. All these details would be displayed, right? And right from here, just like Amazon or Flipkart, you can click on add to cart, or you can do a direct investment, which we call lump sum one time, or you can do an SIP. Doing SIP is, SIP, VK sir was also mentioning, it is a best solution, a best route for a long-term wealth creation, because it offers you rupee cost averaging, and you participate in the entire market cycle. It is the best product for the compounding benefit. Through this, you can get the magic of compounding, right? So in this way, you can just set up your amount, tenure, month, and click on proceed. It will be successfully done, right? And here we have goal-based planning. There are various different goals are there. Basis the goal planning, your goal can be, I think it is the best way to tackle your expenditure. It's expenditure management, you can say. Instead of thinking about it, how I will achieve, why not to create that expenditure as a financial goal and work towards it, which can be a retirement, which can be a new travel. Of course, in current scenario, it would not be. But then yes, going further in future, child's marriage, child's education, buying a new house, upgrading a vehicle. These are all expenditure if we convert into a financial goal and work towards it with a small amount of money. This will help you because your money will work for you, and you can easily achieve your financial goals. So that is one of the best part that InvestNow offers. Followed by gold. Yes, of course, gold is one of the most auspicious asset class, and there are a lot of advantages and benefits when it comes to investing gold digitally, right? There would be no question of purity, number one. There will be no question of making charges as such, and there will be no question of storage cost. So that those are the advantages, wherein sitting at home just in few clicks, you can as low as 1,000 rupees or as low as 0.5 gram, you can invest in MMTC PAMP 99.9% 24 karat pure gold. So that all is available with HDFC Securities. We are here to give you at maximum products for diversification and to help you build the portfolio, take the advantage. Also, global investing is there, which is into US investing. That also you can explore on this platform itself, as you can see, right? So that's all from my side in terms of platforms. Any thing you want to add, Sarat sir, please add, or you want our viewers can ask questions, we can take it.
Right, Ashish, you have covered everything what we have to offer. I think the mutual funds should be done through the SIP route. Even a lump sum we can do on a daily SIP. If someone wants to invest 10 lakh rupees at one go, he can choose 10 days or 20 days and make it a daily SIP across 20 days. So you get the rupee cost averaging for the month. Which would be in this sort of times, a good, what is a good average, acquiring price of NAV one would get. So then about the gold, at time of crisis, gold does well, and in India there is a lot of demand for gold. Even during this current Akshaya Tritiya, I think all the platforms, including the jewelers, have sold gold through their retail stores and their the electronic stores. So here HDFC Securities, at HDFC Securities you are getting everything at one window, and customers can make use of this opportunity through the InvestNow platform. But besides that, we also have global investing. If customers can look at today, sitting in India, an Indian resident can invest in US markets, at India at live prices. Mind you, this is not a PMS. This is a brokerage account, a retail brokerage account where the customer, resident Indians can invest up to $2.5 lakh per annum through the LRS scheme. So that is what is global investing, and then all the reports of DG Gold and mutual funds you can generate from this InvestNow platform, where through the reports tab. So here, this is we are a financial supermarket, and this is what we are here to do, and we offer every we are present across all paradigms of of products, and there is nothing which HDFC Bank and or HDFC Securities does not do through HDFC Bank. So now that we have made investments in mutual funds simple through a couple of clicks of a button. The mutual fund one can make a mutual fund investment. And yes, you have reiterated goal planning. You can do goal based and need based investments also can be done through the InvestNow platform, right? So it happens. These are a few clicks away, right? Yeah, that is from my side.
Great.
So if anybody
so few
has a
questions we
question,
are getting here from a lot of customers and I think employees. Pretty interesting questions. I would like to definitely answer them. Sumit Nagpal is asking, though InvestNow, are we investing in regular plans or direct plan? Sumit, that's a very good question. Let me put it this way. Yes, we are providing regular plans. Let's try to understand what is the difference between regular and direct. The difference between regular and direct plan is just of the expense ratio or the management fees. In direct plans, the expense ratio is somewhere around 1.5%, and in the regular plans, it's about 2.5%. So merely a difference of about 1 and 1.5%, right? Now, yeah, if you are looking at on a macro level, yes, if you do it directly with the AMC, you will get definitely that discounted price, a 1% less NAV, which is fair enough. But let's try to understand, is that possible in this current lockdown scenario? That's number one point, because there would be requirement of submitting physical documentation. You need to check that. Okay, even if you are able to do that, it is fair enough if you are confined up to only one AMC. Please check this. What will happen few years down the line? After 5 years, you would not only want to invest in only Axis AMC or only HDFC AMC. You would say, I want to go DSP BlackRock, I want to go with Birla Sun Life, I want to go with some other AMCs. So many AMCs are there who are providing schemes. Now, when you will go at the time of income tax return filing, my friend, please make a note here. At the time of income tax return filing, when you will go to your CA will ask your capital gain statement. And if you bring this scattered investments to them, probably he will charge you more 1,000 or 2,000 rupees to make that capital gain statement, and then it will be submitted for your return file. So we understand that is the need of the hour. And at HDFC, we ensure whether you have InvestNow account or you have your normal trading or demat account, we provide you capital gain statement in a click of a button and absolutely free of cost. As you can see right here, under the report section, we have here my capital gain loss statement. You click it, download and submit it, right? So that is what we call, it's a state-of-art platform, one-stop solution for all your needs, right? I hope I have answered your question, Sumit. Moving towards the next question. Damodaran is asking also, instead of investing in ideas, we can invest through. Okay, sir, in order to invest through, whether it is invest in ideas or you are talking about a small case, you need to have a demat and trading account, right? Small case is a providing service provider, and we have come up that platform on our digital properties, and the exclusive packages or portfolios, you can see that insurance tracker, Shubh, Aram, HDFC pack, different companies pack, smart beta, fallen angels. These are some of the portfolios which are curated and created for specific customers only by HDFC Securities research team. So probably that you would not get on any other platform. So that's the uniqueness of it. And if you have HDFC demat and trading account, yes, you can explore that. Moving towards the next question. Is it good to invest in US stock at this point of time? Rishi, see, let me tell you that if you see you, me, or probably as a country, as in India, is a significant contributor in the growth of Apple, Google, Facebook, and Netflix. These are part and parcel of our day-to-day life. We purchase these costly products and we take their subscriptions, right? So these things are, we are paying for these products, and we have been a significant contributor in the growth journey of those companies. Don't you think so that their growth journey should replicate in your portfolio as well? That is what global investing offers you, because those are, US is the fastest growing economy. US, these companies have given phenomenal returns, especially if I talk about Amazon, it has given somewhere around 3000% returns. But earlier there was no access, now you have. And the beauty is that you can also do it through fractional trading. So if you feel that one share of Amazon is of $2,000, which is too costly, you can take 1/10 of it by $200 as well. Definitely, it offers a diversification to your portfolio. That's an added advantage. It gives your portfolio geographical diversification. And yes, these companies are having proven track record of growth, and this growth can replicate in your portfolio as well. Hope I've answered your question. Moving towards the next one. Okay, so you are having, Mr. Damodaran is saying, I already have HDFC demat account. Yes, sir. Then you just log on to hdfcsec.com, as you can see on the screen, hdfcsec.com, and then click on invest in ideas. And right here, you can see these packs, which are exclusively for all our HDFC Securities customers. So you can explore this, and you can you can start your investment journey. Please get in touch with any of them. If you want me to show you how to do that, you can simply click on any of them. Say, for example, insurance and AMC pack. If I just click on it, I'll tell you how to read this, as you have asked. So here you can see the thought process behind this, why you should invest in this particular small case, right? The details are given here. And here you would see the triggering point, what CAGR returns are there, and what sort of index value we have given. So last year, as on 2019, we have given the index value as 100. And in 1 year of time, or maybe you can say in less than, as on Jan up till now, the index value moved up to 142. So that means 42% returns, which is absolute cumulative in 1.5 year, which is nothing but a CAGR return of 31%. Right? So 1 lakh rupees invested in January 2019 would have been converted into 1,42,000 by now. This is what it essentially means. And you can purchase it. Current value is only 18,500. You can, in single click, you can purchase it. If you want to know which stocks are there, you just click on stocks and weights, and you will be see that AMC, under the AMC category of mutual funds, there is HDFC Asset Management and Nippon Life. In insurance, there are HDFC Life, SBI Life, Prudential, Lombard, and General Insurance Corporation of India, GIC, right? And their weightages have been given here. And you can see that this last review was happened on April. The next review will happen on July 7th. So I think it is one of the best tool, similar to mutual fund, but not a mutual fund, similar to PMS, but not a PMS. This small case is one of its fantastic platform itself, which offers you this advantage. I think you should take full advantage of this, because this is the right time to go for it. Considering the time constraint, we'll be able to take maybe last question, and you can definitely connect with any of, if you want any specific information, viewers, you can just drop in your contact number. I will ask someone from HDFC's team from our regional level to get in touch with you. Okay, so next, this last question, this is coming from Mr. Nitin Mukesh. He's asking, is the safest way to invest in Nifty stocks? Yes, Nitin, as VK sir have rightly mentioned, the best part is that invest in ETF, Nifty ETF, never ever any country's index will go to zero, right? And these phenomenal returns, what Nifty have set the benchmark since inception, giving double-digit returns, beating inflation and creating customers' wealth. That's Nifty. Though there are portfolios who have given way higher than that, but Nifty is especially for those people who do not have ability to pick up the stocks, do not want to get into that, just they want to earn better returns, without any intervention. So I think Nifty ETF would be a best thing. Nifty ETF is nothing but a replica of Nifty. Right now, if Nifty is of 10,000, 1/10 Nifty ETF unit would be 1/10 of it, around 1,100. Yes, you can definitely invest in that. So that's all, viewers, from my side. Thank you so much. Sarat, over to you if you have to add any closing remarks.
Yeah. Thank you, Nitya, and thank you, George, for having this webinar set up. It was it's a start. I think we would have many more of such webinars, and we would like to engage with more and more customers and help them invest profitably and rightly. Thank you very much. Thank you, Ashish, and VK. I've already thanked VK sir. Thank you the entire participants who have joined in from the bank as well as the customers. Thank you very much. Yeah, happy investing.
Thank you all. Signing off.